Good to see everybody. Thanks for coming. So we've the last number of webinars I've held here at FX Street. We've gone over the live markets and set up some trading opportunities and things like that. We've applied our core supply and demand strategy, looking where to see where banks and institutions are buying and selling, so you can too. Today we're going to kind of supercharge all that and spend some time going over what we call at Online Trading Academy the odds enhancers. We'll go over a few of these, and then I'm sure there'll be plenty of time at the end to go over the live markets and start to apply what you're learning here. Today's webinar is sponsored by UTradeFX. So thanks to UTradeFX, they are sponsoring today's webinar. And let's begin. So first off, if you don't have my email address, there it is. I was responding to some FX Street emails this morning. So I was noticing some people are sending in some really good charts. They're really starting to get it, which is a great thing to see. So nice job there. So the odds enhancers. What these do are, this is a checklist. So first off, there's a number of these, and I don't even know if I'll be able to go over half of them today, but there's a bunch of these, and what these do, they help out with two things. When it comes to the whole supply and demand strategy and identifying levels, supply and demand levels, the two most important things are structure and location. First of all, where is price in the larger time frame supply and demand curve? That's location. That tells us if we should be a buyer or a seller. Second is structure, the structure of the level itself, and that's important. That tells us, is there a lot of institution demand here, or bank supply, or what have you? Who's buying and selling? How much are they buying and selling? That's what the odds enhancers help us answer. Okay, and you'll kind of see how this goes. So remember, when looking at price charts, and I've said this before, the price charts that we look at today, and any price chart you can imagine, any price chart you can access anywhere in the world on any website, at the end of the day, they show you different versions of the same thing. They show you trades that have happened or filled orders. But as I've said before, remember, if you're new to this, that's what the price charts show us is actually the opposite of what we need to find if we're going to be a successful short-term trader or longer-term investor, right? The charts show us actually the opposite of what we need to see. The charts show us filled orders, all the trades that have happened. But if you think about it, the only thing responsible for prices moving in a market or prices turning in a market are unfilled orders. Where are the stacks of, major unfilled buy and sell orders? Make sense? Okay, so the whole supply and demand theory and strategy, focuses on that. Where are those orders, and where should you be buying and selling? The odds enhancers, help us do that. And the odds enhancers are really, in the simplest form, a checklist. Okay, a checklist. And one more little story, and then we'll dive in. So, I was in Dallas, Texas, not long ago, and there's always a bunch of pilots, a lot of American airline pilots in Dallas, Texas, and they show up to the events, and a lot of these guys tend to do pretty well. So I was talking to them one time, and I said, what is it about you guys? You tend to pick this up really quick and do pretty well for the most part. They said, this is what flying is. It's a checklist. We just follow a checklist. That's our life. Our life is a checklist, and that's all trading is. I said, you're right. So that's the world they live in. That's the mindset they live in. You give them a checklist, they can do it. And that's what this is. Keep it nice and simple to a checklist. That's really how my brain works too. Not focusing on, is Europe, is the European economy going to be good or bad, and what's Spain looking like, and can Greece repay their debt, and what's really going on in China and all this stuff. If the experts and the people the central bank leaders around the world can't figure that out, why should we even spend a minute figuring out? Number one. Number two, it has no bearing on where we should be buying and selling in a market, right? Even if you knew, let me ask you this. Let's say you knew what the Fed was going to do and say. That's a great point, Mike. That's an excellent point. I might have to steal that one from you if you don't mind. Yeah, but pilots don't panic in turbulence either. That's right. Okay. They know there's going to be some bumps in the air, but at the end of the day, the plane, which is the strategy, is built for that. Not a big deal, right? So one last thing. Let's say that you, and I'm talking to you specifically, individually, were the only person in the world that knew exactly what the Fed was going to do and say at the next FOMC meeting. Let's say that you knew 2 weeks ahead of time exactly what they were going to do and say. Does that guarantee that you're going to make money on that? Does that guarantee it? No. Imagine if you knew what was going to come out before it came out, right? Think about that. It doesn't guarantee anything, okay? Anyway, so I think you get the point. So let's focus on these odds enhancers. Let's dive in. I'll get through as much of this as I can, and you'll see where we're going. The first two I'm going to go pretty quickly through because these I give you all the time in the looking at the live charts. Number one, and just so you know, if you've never taken a course at Online Trading Academy, you're also getting a little preview of what the course is like. These are some slides right out of the course. These things are all pretty big lessons. So number one, how did price leave the level? Now, with odds enhancers, we come up with a nice probability score. Okay, I guess a pilot, based on their entire checklist, which probably includes the flight plan and information from planes in front of them on how, whether the air is choppy or not. You know, once that whole checklist and plan is done, they could probably pretty accurately, for the most part, predict whether it's going to be a smooth flight or a bumpy flight. I fly a lot, and most of the time they're pretty accurate. Sometimes some bumpy air comes up that wasn't expected, but for the most part, they're pretty accurate. I mean, when they tell the flight attendants to sit down in the middle of a flight, it gets really bumpy. So number one, how did prices leave the level? Okay, notice on the right, real quickly, you could have a gradual move away from the level. Or in the middle, you could have a stronger move away from the level, either with big red candles or big green candles. Or number three, all the way over on the left, you can have a gap away from the level. Out of those three choices, which one represents the strongest supply and demand imbalance? Because that's what we're looking for, an imbalance. We don't want, prices always turn in markets at price levels where supply and demand is most out of balance, right? So the gap represents that. That's why it gets a score of 2 out of 2. And again, the lesson here is, like I just said, the stronger the move away from an area, the more out of balance supply and demand is at the area. Okay? Yeah, all news is going to do is speed up what was going to happen anyway. Odds enhancer number 2. And again, we're going to apply this to the live charts in a few minutes. Odds enhancer number 2. How much time did price spend at the level? So again, for those that are new to this one's important because this one is exactly opposite of what the trading books say. The trading books all say the same thing. They say if you're looking for key support and resistance levels, right? Those key words, support and resistance in trading books. Remember, when I say the word supply and demand, I'm not referring to the word support and resistance. Okay. So when the books tell us, though, to look for key support resistance levels, they say look for areas on the chart where there was lots of trading activity, many candles on the screen, above average volume, and so on, right? But if you think the logic through, I think you're going to find that the opposite is true. For example, at price levels in any market where supply and demand is most out of balance, are you going to spend, are there going to be lots of trades at that level, many transactions? Yeah, Al stock, yeah, very few. Remember, if you have a price level where you have, 1,000 buyers on one side and, 1,000 on the buy side and 900 on the sell side, price is going to spend quite a bit of time there. But as soon as the 900th lot is filled, you've got 100 on the buy side left, no sellers, price is going to go up. It has to. Okay? But think of another scenario where you have 1,000 on the buy side and 50 on the sell side. How long is price going to stay at that price level? Not very long, right? Because once the 50th lot is traded, now you've got 950 on the buy side, 0 on the sell side. Price is going to shoot higher pretty quick. It's a bigger imbalance. So if we all agree with that logic, then what is the picture going to look like on a price chart? Is it many candlesticks and a lot of time, or very few? It's very few, the opposite of what the trading books say. So be careful with that. Right, so you want to keep the time frames pretty much relative. If you see I'm reading the chat there, Edward and Vlad. So if you see a chart where you have, I was just looking at the 30-minute euro. All right. Look at this 30-minute chart of the euro. We've got a supply level right here. I know my charts are off. I have to turn them back on. But I just turned them off right before the session started to make sure the sound was clear. But here's a supply level above current price. Notice very little trading at the level, strong drop away from the area, and notice the candles, like 1, 2, 3, 4, maybe 5 or 6 candles in there at most, right? Very few candles in there. Okay, but if I go to a 60-minute chart, you're going to see half the amount of candles in there. There it is. Okay. But if I go to a 5-minute chart, you're going to see tons of candles in there. Right? See that? But I would say, when you find the level in, for example, this time frame, here's a 60-minute chart. Okay. I just keep it relative, and that will work out fine. In other words, if prices come up to this level and turn lower, yeah, you're probably going to have little 5-minute demand levels on the way up, but they're not going to, but ultimately price is going to go down through those 5-minute demand levels before going up through the 60-minute supply level. Does that make sense? If there's a new supply level formed, or a new demand, a 60-minute demand level formed close to this 60-minute supply level on the way up, yeah, then we're not going to take it. Mike, I wouldn't worry about that too much because every time I change this time frame, wicks will become candles, candles will become wicks. You can make yourself crazy with that. But the one thing you don't want to see, like I don't want to see a lot of, like I don't want to, in this level I'm showing you here, I don't want to see a big spike higher with a candle. Okay, I don't want to see that. I want to make sure that price could not go higher. All right, let's go back to the lesson. Otherwise, we'll never get through it. I wouldn't say, Boyke, there is a best time frame. I would say that the time frame you want to use is, are you looking to do short-term trading or stick to the longer-term stuff? Answer that, and then I'll give you the time frames I think would be best for that. Okay, both? Yeah, so what I have 2 separate workspaces set up for that. And for the long-term stuff, I'm just looking at weeklies and dailies and a 60-minute. I'm sorry, weekly, daily, and 180-minute. That's it. And I'll just scroll through and look at those markets. And I'm primarily looking at the daily and weekly when I find an opportunity, meaning I see price coming to a fresh level and there's nothing on the other side in the opposing direction. Then I'll go down to, that's when I'll use the 180-minute chart and just see if I can refine that level a little bit. In other words, figure out where most of the trading took place. Now you can use a 240-minute chart or 180. It doesn't really matter. I suppose you can go down to a 60 if you want. I don't. Okay. For the short-term trading, I would say daily, 60, and a little 5-minute chart is plenty. That way you know where you're at in the big picture from the daily. Okay. You can do your curve, supply-demand curve on the 60, and then just take your levels off the 5. You'll know exactly, by the time you get to the 5 doing that, you'll know whether you should be looking for buy setups or sell setups. All right, so back to this for a moment. Again, look at the scores. So the less time price spends at the level, the more out of balance supply and demand is at the level. That gets the highest score of 2. Here's a trade that took in the trading room. Made a little bit of money on this. This is a short-term trade. Again, here, Boyke, you can see on a 5-minute chart. So this was obviously pretty high on the, oh, no screen? Sorry. Let me do that here. Okay, good. So again, less time at the level is better. That gets a higher score. And then here's an example of, it's a little dated, but there's the euro. Again, notice in the level itself, not much time spent there. Price falls away from the level. Not the greatest decline in price, but it is steady. You don't have, price falls a little bit, big drop. Hangs out a little bit, big drop. Look at how prices come back to the level. Remember, the other part to this is when prices come back here, this is where we sold short for a little day trade. Who are we selling to? We were selling to a buyer who's making those two mistakes. Don't forget, that's not even in the odds enhancers, but that's part of core strategy. Right? Someone who's buying after such a big rally in price into a price level where the chart's telling us supply exceeds demand. In fact, it's telling us supply greatly exceeds demand. Very little time spent at the level. Next one. How far, and I want to spend some time on this one because this one's important, and I'll show you a couple other examples after this. How far did price move away to the level before, from the level before returning back to the level? So let's start all the way on the right side of the screen, the poor example. Right, so price can move away. So for measuring the size of this red candle, let's say that's 1 point, and price falls 1 point away and then returns to the level. That would suggest that your initial risk reward, without looking at anything else, is just 1 to 1. Okay. For the middle one, notice here. Let's look on the buy side. Price moves from, let's again say the size of the candle is 1 point. If price moves up 2 points before returning back to the level, then we would say your initial target is 2 to 1. And of course, this example over here, the best case scenario, and you could get better, you could get much better than this, of course, would be 3 to 1. So the farther price moves away from the level before returning back to the level, the larger the profit margin potential and the probability of the trade being successful. Okay, now let me see. There's a nice example, but I want to show you. I'll show you another one. Give me just a moment, and I'll grab another one for you. Hang on just a second. You should be able to hear, and you should be able to see okay. All right, perfect. So I want to take that odds enhancer a little bit further, because it really does two key things that we need. Here is, for Online Trading Academy members, you know what this is. This is ProPix. It's a service that comes out every day. But so what I'll do a lot of times is I'll take our ProPix and I'll go down to ProPix that I like, and I'll go down to smaller time frames and find smaller levels inside bigger levels. It allows me to put a bigger position size on and still have the same amount of money at risk, not risk more money, and go for even smaller targets, which is great. So this ProPick it was a short in the Japanese yen, made about $638 right here. I took the same trade over here and made about $1,600, and I want to go over how we did that. So I just took the level off a 30-minute chart in ProPix down to a 10-minute chart right here. But watch. The key odds enhancer that made this work, there were a number of things at play here. First of all, let's go over the odds enhancers in the order that we covered them today so far. Odds enhancer number 1. Look at the strong drop away from this level here. Okay. Everybody see that? How would we score that out? Would you give that a 1, 2, or 0? The area I'm pointing to here. How would you score that out? Yeah, I'd probably give it definitely a 1, but probably a 2 for sure, right? The only thing better than that would be a gap. Okay. How about odds enhancer number 2? How much time did price spend at the level here? Is that a lot of time or just a little time? Or better yet, what score would you give that? Yeah, that time at the level right there, I would give it 2 for sure. Yep. Okay. Now the next odds enhancer is one we want to kind of slow down and spend more time at. How far did price move away from the level before returning to the level? What score would you give that in this case? Now that one should, in this case, should be automatic. There's no subjectivity at all. I can blow this example up. I'll make it bigger. There you go. So what score would you give that? How much time? How far did price move away from the level before returning back to the level? Yeah, exactly, Dave. That automatically gets a 2. Because if the width of this level, the height of this level is, say, 1 point, this is at least 3. Yeah, it's at least 3 to 1, Chuck, exactly. Make sense? Okay, it's probably a little more than 3 to 1. But I want to, again, I'm very big on logic. I'm very paranoid. In all my years let me tell you, I've been in the trading education world for a long time. And it's because I had just so much time on my hands as a trader back in my 20s. And for years in the beginning, I started writing articles and stuff. People say, why don't you write a book? Why don't you write a book? Why don't you write a book? I'd get like a request every day. And I would say, you know what? There's a little part of this that I think I have figured out, but I can't really explain it yet. So I want to make sure I have it right. In other words, I never want to put anything out there that I'm not really, really, really sure about. And I would see other people write books about things that I could, they didn't know that much about, but it was important to get a book out. And, you got to be careful with that, because those books can come back to bite you if they're not accurate. Well, it's the same thing here. I'm not, I never want to say anything that doesn't make 100%, logical sense. Right? It's got to make logical sense. You've got to completely understand it. We need to poke holes in it, and it's got to be right. It's got to be real. So let's walk through this odds enhancer from the logic side before anything else. When price is falling here, okay, when price falls from here to here, what do I know to be true? Right? It's not everything, but there are a few things, pieces of information we have. First of all, when prices fall from right here to right here, I know that supply exceeds demand right here. Right? I know supply exceeds demand right here. Number one. Number two, when price falls to right here, I know that all the demand or buy orders that were left here, and there were unfilled buy orders, we know that for a fact because prices rallied away from this level, right? Especially in strong fashion. But I know that when price comes down to here, I know that there can't be any more unfilled buy orders here. It's just not possible. Right? There were unfilled buy orders here. That's why when price came down to here, it kind of just chopped around sideways for a little bit. And then dipped down to the lowest low before returning back to the level. So when price is down here, I can be very confident that there's no more unfilled buy orders here. Maybe some new demand will come in over here. That's the only thing I have to watch for. But I'm not worried about any of this stuff to the left. That is 100% factually gone. Make sense? In other words, you can't have a willing buyer sitting here when price is trading right down here at this point. It's just not possible. You'd be filled instantly. So, therefore, when price comes back to the level here, okay, I'm very confident that it's going to move from this bottom black line to this lowest low on the initial move away from the level fairly quickly, right? Makes sense? Now, below that, I'd have to look to the left and see what's there, okay? Certainly not every trade is going to do this after you sell short. But I can get a lot of information off that odds enhancer number 3, and that's such a key odds enhancer. It helps open up that initial profit zone, and it tells me that, the opposing side to my trade is just not there. Or it tells me it is there and I shouldn't take the trade. Meaning, if I sell short, which we sold short right here, I took this is actually my trade. I sold short right here, okay, to a buyer who, think about it, was buying after a rally in price into a price level where there was a big supply and demand imbalance. We know that because of the first three odds enhancers. All right. In other words, lots of banks with unfilled sell orders here. And one of the most important things is the chart told me there wasn't any significant demand until this pivot low right here at 125.20. Does that make sense? All right. Furthermore, my last point to this, and then we'll move on. If you count the number of candles in the initial move away from a level, whether it's a long or a short, and let's look here, and I don't know, I'm just going to eyeball this and say there's, I don't know, 10, 12 candles in here. However many candles are in here on the initial move away from the level, you can expect to do the next move in half the candles or less, okay? Because there's just nothing to stop it from falling. Okay. All right. All right, let's move on to the next odds enhancer. Right here. Hold on a second. Let me just go back to that screen. Okay, 1 second now. It should be coming up any second now. There it is. Okay, that one. Okay, there we go. All right, so instead of looking at this one, because we just went over that, let's go to the next one. This one's very important as well. Boy, I don't disregard fundamentals. I'm just they're not going to. I like to know when things are coming out because then I can expect a lot of fills. In other words, another way to say that, I can expect price to come to our predetermined levels. Right. In other words, the only way price is going to get to your key demand levels is if you have, often if you need some bad news to get price down to your key demand levels. Right? If you remember, that's not a good one to bring up, but I was just thinking about one of the biggest news events last year, for example, the tsunami in Japan. Horrible, awful event. But if you remember, every day we had big levels hit, and they were, huge trades. That was probably the most profitable yen week I can ever remember. And again, it's horrible thinking you're making money while that disaster is going on. But unfortunately, that's how the game works. I mean, that's how the markets work. Is prices are going to get out to those extreme key levels on really good or really bad news. Yeah, trader. I trade my own account, and I also manage a fund. And it's interesting because the fund returns are very, very consistent, and it's not that the others aren't, but doing the let me put it this way: you get the average person 2 to 5% a month, with very, very low risk, trading, very few transactions, very low risk trading. The average person's going to be thrilled with that. But you tell the average day trader, trying to make 2 to 5% a month, that doesn't sound exciting. You know what I mean? It's just funny how that all works. But much easier to get that. Anyway, we'll talk about that another time. I actually wanted to do a session on all that, short-term trading and longer-term trading. What's the simple plan to actually achieve those profits? Not just what's the buy setup and what's the sell setup. But what do the numbers look like behind it? Let's take a look. Yeah, Edward, I don't really combine the two. That's why you never hear me talking about it. But not a big deal. Let's take a look at this one. And you can always shoot me an email. Let's take a look. Has price returned to the level? This is a key odds enhancer. Very, very key. We want to, I always say, we want to get in on the first pullback in price to a level. Okay. And that's true. There's one caveat to that, though. Well, first of all, let me back up. Remember that you should be able to see that new screen. We're looking at odds enhancer number 4. Think about what these levels are that we're looking at. They are, stacks of unfilled buy and sell orders from the, hopefully the biggest banks and institutions in the world. That's the goal. Okay. So if a level is too strong, if there's too much demand or supply in that level, what's going to happen is, let's say it's a demand level, there's a lot of unfilled buy orders, price is going to keep shooting up from that level, right? It's going to take off from that level. So with each successive pullback or decline into that level, what's happening to the amount of demand? Is it increasing or decreasing? It's decreasing, right? Okay. Because some of those buy orders are being filled. So with that, it's logical to say, it makes logical sense to say, well, we should only get in on the first pullback because that's when the level is strongest. And I would say that that's true. However, there are many occasions, for example, if you're in the mastermind community at OTA, a couple weeks ago we had the low in the yen like 4 days in a row. I'm sorry, not in the yen, in the NASDAQ, like 4 days in a row. It was all into the same level. We kept trading off the same level, and it came back there like 3 or 4 times. And you might say, well, looking at this chart, that violates this. Well, the caveat is when price comes back to the level and just touches the level and takes off, for example, like this one here in the middle, the demand zone, see how it just touches the level and moves higher? We would take the second pullback, right? I wouldn't score it out as high as if this is called a fresh level over here on the left where it says best equals 2. Notice those are levels that were created. Price had not been back to those levels yet, meaning they're fresh. And that gets the highest probability score. Over to the right, once you have one retracement, we take 1 point off that. But again, if price just touched the level on the first retracement, it doesn't mean it's a bad level. Okay. I would say if you want to be safe, once price trades a quarter, 25%, I would say, into the level, stop taking it. In other words, don't take the next retracement because that's telling you there's just not a lot of demand or supply left. Okay? Make sense? All right. That is odds enhancer number 4. And lastly would be the any of the correlations. Okay. I'm looking at the chat here. Let's see. Yeah, level on top of level. We've talked about that one before. Okay, we've talked about that one before. And that's certainly not the answer. I don't have that in the list to go over today, but we've talked about that one before. That's certainly a key odds enhancer. Okay, definitely helps increase the odds. Andre, contracts traded totally depends on the size of the level. Okay, in other words, it really depends on the size of the level. That determines the position size because we never want to risk more than like for the big accounts I was talking about. Never really want to risk more than 2% of the account on those. That's just those. I mean, if it was there's different situations, but on those, I'm just giving an example. Never want to risk more than 2%. So depending on the size of the level, meaning the size from entry to stop, going to adjust the position size to make sure that we're not risking more than that max risk. Okay, let's go out to the live markets now. All right, so here we're looking at the euro. We've got a couple levels on the hourly chart there. Above current price. And, okay. Again, if we score these out, and we certainly didn't go over all the odds enhancers here today, we've got kind of 3 levels on top of each other here. You could probably take, but here's one thing I want to show you. Okay, here's one thing I want to show you. What's the difference between these 2 levels? And I'll give you a hint. The bottom level I would never take. The top level I probably would. Why would we not take that bottom level? What's the problem with it? On the 60-minute euro. Profit margin is one thing. So remember, we want to make sure that this initial move is at least 3 times this. So this is, call this 10 points. It's like almost 11, but call it 10 points, right? So this is 3 to 1, okay? This is 3 to 1, decent spot on the curve. Take a look right here. I always want to take a little X-ray snapshot. Here's the level. Here's the problem. That's the level on a small time frame. So this is the X-ray. Okay? It doesn't look like, you know, think of an X-ray that the doctor takes. If I'm looking at this bottom supply level, it doesn't look like there's anything broken here. We're looking at, I don't know, an elbow. It doesn't look like there's anything broken, but there's something wrong. There's pain. We go down and look at the X-ray, and there's where we see it. Okay? Look at this. It's basing sideways. Price drops out of there, and then comes back in. I can tell you, people that are starting off at this, novices, I don't want to call people novices because it's like a negative connotation to it, just people that are new to this, this is something that gets them probably as much or more than anything else. They don't look for this. All right? So because price fell out of this area, rallied back, and then went down, it's not fresh enough for me. Could it work? It could work. But if you have the skill set to identify a true fresh level, why would you want to take anything else? Okay. So I'm going to undo that, and now I'm going to stick with this upper level. Okay. Now my lines are not going to stay there either. I'm going to push this line right up to here because that's where the actual drop happened from, right here. Okay, right there. So now, if we score this out, strong drop in price away from an area, very little time spent at the area. The only thing that would make this better is if this were rally-based drop, like up here. This is not. This is drop-based drop. A little bit lower odds because those are always going to be found in the middle of moves. But, you know, it is what it is. It's okay. And, again, strong drop away from the area, very little time spent at the area. Notice how far price moved away from the area before potentially returning back to the area. Okay. Yeah, Dave, yeah, absolutely. Again, I started out my career on the floor of the Chicago Mercantile Exchange handling institutional order flow. So all that matters, I mean, you could throw fundamentals and everything else out the window. And I started out on the Forex floor upstairs at the CME, and it was all Forex, the whole Forex quadrant up there years ago. All that mattered to anybody on the floor was how much willing, demand and supply was at each price level. That's all anybody cared about. Believe me, if you ask someone, if you told, let me put it this way. Let's say you, and I mean you, are on a trading floor, and I give you two choices. I say, look. You have to pick one or the other. I'll give you. There's two services that you can have one of them, but you can't have both. Service A, here's service A, and you pick which service you want. Okay, you can't have both. You have to pick one. Service A, you're going to know every economic report, exactly what the number is, 10 minutes before it comes out, and you'll be the only person on the trading floor. You'll be the only person in the world that knows it. Or service B. You're going to know exactly how much, how many willing buyers and sellers, how much willing demand and supply, the actual orders. You're going to be able to see all the orders from all the banks and institutions. Okay, you're going to be able to see how much is on the buy side and how much is on the sell side at every price level. Which one are you going to take, Service B or Service A? You can't pick both. Of course you're going to take B. Of course you're going to take B. John's still taking both, even though he can't. All right. A lot of people went to prison for that, John. They got a little greedy at the Merc, but that's okay. All right. Of course you're going to take B. B guarantees profits. You can't lose if you have B. Right? A, what does A really get you? Okay? Anyway. All right. So I think you get the point there. I forgot why I even was telling that story, but all right. Right. So, oh yeah. Thanks, Dave. So again, when you come from that mindset, that's how I was trained. That's how my brain works with this stuff. So it's so important, as we were saying, to know that a level is fresh. That is key information. Make sure it's a fresh level. And when I say fresh, it doesn't necessarily have to be the first pullback, but make sure prices have not gone too deep into the level. All right. Again, if they've gone more than 25% into the level, there's probably better levels out there. I would just go find something fresh. Okay. All right. So there's my email address again, sseiden@tradingacademy.com. Hopefully today's little lesson on odds enhancers was helpful. Usually we spend time just in the live markets. Today I thought we'd take a step back and bring things a little forward with odds enhancers. We can now start including that language in our trading sessions, which we'll start doing. I can say odds enhancer number 1, 2, 3, or 4. You'll know what I'm talking about. And if you're new to the sessions, you're a little lost, just go back and review the recordings. There's plenty of them on the FX Street website. And thanks for your time. Hope it was helpful. We'll see you next time. Thanks again.